This is a stock analysis blitz for Pan-African Resources. Pan-African Resources are a British gold miner listed on AIM, but also have a secondary listing on the South African Stock Exchange, the A2X. Before I start, please remember that I do these videos just for fun as a hobby and always speak to a qualified financial professional before making any investment decision. So PAF have 4 small mining and tailing processing hubs in South Africa. You can see their portfolio here, and they also have some exploration projects in Sudan, although personally I wouldn't be pricing in anything that's got anything to do with Sudan. And actually there was a bit of a civil war there only the other year when they had to suspend all of their exploration. So they have the Babaton mines, which are underground mines, and then the tailings, also as a separate resource, and then the Elikulu tailings project, and then also the Evander mines. And as you can see, they've got a fairly stable history of gold production. But the Babaton tailings, that will be running out, they'll be running out in about 3 years' time. However, as of late this year, they should get this Mogul tailings project online. That's actually quite close to Johannesburg, and that will add 50,000 ounces of gold to their production, which will be a nice boost. But when you consider their portfolio overall, it's probably only going to be kind of maintaining their current production in the long run. And you have to say that, you know, they do have a nice set of resources here, which should last for a good 10 to 20 years. Their all-in sustaining cash cost is actually quite low at less than 1,300 ounces in 22, which was a similar number in 23. And their half-year results came out. Their financial year actually ends in June. So their financial half-year 24 has already come out, and that was actually a slightly lower AISC of only 1,300 ounces. So they really are achieving a very nice margin here, one which a lot of gold producers would be envious of. Their market cap, their AIM listed, and of course their market cap is only 0.4 billion, and that's a bit of a premium on their net assets. I put that down to the fact that they don't seem to capitalize exploration and development expenses as an asset, as I've seen with other gold producers. They have a bit of a strange corporate structure with group and then company buckets where different assets are stored. So that might explain that. I can't really go into it in that detail for this Blitz video, but that's how I explain the relatively small net assets. But it's still actually a price to book of 1.25, which is actually fairly cheap. And then the reserves are obviously then tower above the current market cap, as do the resources. These reserve and resources bars, they really are a crude guesstimate, which I get by deducting their average, by deducting the AISC from the average realized gold price to give me a margin, and then multiplying that by the amount of reserves or resources that they have. So that's how I come to that number. It's a very approximate, very rough calculation. But still, even if you were to take away half of that, thinking about discounted cash flows and things, they are still very cheap for sure. But that's the same as we've seen for every gold stock I've looked at. Everyone knows that the gold stocks are out of favour with the analysts and are all fairly cheaply valued. Just came out with their financial half year 2024 results in the RNS, and their gold production was up 7%, so it was kind of actually up to normal numbers, and obviously better gold prices and a lower AISC. And they said that the MTR project, that's this Mogul tailings retreatment plant near Johannesburg, That's going to be expected to start in late 2024, confirming it will add 50,000 ounces to production. So generally, this stock seems to have a bit of a repressed stock price in recent years compared with other gold companies, but we see quite a clear trend here of the price increasing, which I think is obviously related to this MTR project starting. It's almost as if that's getting priced in now. But also, whenever I've seen these kind of linear but noisy channels, often that could be because large holders are selling or buying. And I do wonder if there's a large asset manager actually investing into PAF at the moment. Now, when I compare them to the price of gold, we see that actually, since their inception anyway, they've kind of stayed with the price of gold. So a bit different than what we've seen with some of the other stocks where they kind of overshot and then they've been receding back. You kind of didn't get the overshoot here with Pan African Resources. And so actually, interestingly, whereas gold's 4x since 2005, PAF share price is 5x. So here's their production data, and obviously when we get 50,000 ounces added from the Mongol Tailings project, you know, overall, like I said before, I think it's going to be, you're talking like 10 to 20 years of good kind of stable production coming in. They have a long-standing policy of paying out 40 to 50% of their operating cash flow as dividends, and so they do actually pay quite high dividends, 6.5% as of now, and that's, you know, so with this stock you do get a nice dividend return. So looking at the numbers, and in 2023 there was actually a drop in revenues, and this was because they had to stop production either because of political reasons or things like power cuts. I mean, they've been having energy blackouts because of all the problems going on in South Africa. Now, as of their 2024 half year, those problems have gone away, and actually the revenue's back up to normal. But that is obviously the warning flare of, you know, you are dealing with South African politics here. That their expenditures and things, I mean, not really all that much to write home about. Only as they get more in debt, you know, you'd expect to see these finance costs increasing. I believe they need about 20 million to cover their nice dividends. And, you know, we're expecting a back to normal year. So it kind of all checks out okay, to be honest. And then there's this interesting thing where, unlike almost every other gold stock, they don't seem to have a line item for exploration and development expenditure. But this is too short a video for me to investigate that, but I thought I'd point it out. They have an interesting liability and asset where they do all kinds of ESG stuff, setting up farms and solar panel companies and things, and that comes in as an asset and then also a liability. But really, it's a minor amount, really, the total numbers here. So really the most important thing is the debt, because they are starting to take on more debt, and as of the 2024, it is now 60 million. That's obviously investment to get this Mogul Tailings project online, which should be finished soon. So generally, they've not took on that much debt when you consider, you know, the rewards that will be coming in soon in what's a very simple project. Their current assets are about 61 million, which is all quality stuff, inventory, trade receivables and cash. And actually that gets exceeded by their short-term liabilities. So that's not really a good thing. I think it could be an artifact with the trade payables here, which seems rather high. And I do wonder if in Africa, it's normal to pay your bills a year late if you can, because that way you benefit from inflation by paying your bills late. So I think it could be something like that, but perhaps some accountants there that specialise in Africa could confirm or deny that in the comments. But not really anything seismic here to focusing on. All in all, a nice set of books, really. There's nothing wrong with these books at all. They haven't been issuing loads of shares, which is good. And in this plot that I do, it's a nice plot, really. And then I've got here the value of just their reserves, which obviously stack up well against the differential between their net assets and their market cap. So the way I look at Pan-African Resources is they are a cheaply, they appear quite a bargain when you stack up their future expected revenues against their market cap. Their portfolio looks robust at the moment, with the Mogul tailings going to be replacing the Baberton tailings project soon. And also, by the way, the AISC of this Mogul tailings is only $1,000 per ounce. So, it is quite cool that in South Africa there's lots of old gold mining projects that have. So you've got all these heaps of tailings lying around, and so it is quite good that PAF can fairly cheaply process those, and so with minimal investment have boost their resources. So generally, yes, nice books, a nice stable resource profile. But to be honest, with Sudan being where their exploration is, I don't really myself would want to count on them boosting their reserves based on just Sudan. And to be honest, I don't think I'd want to invest in PAF myself, because I've seen too much news about the political situation in South Africa deteriorating, and the whole country just going back to the medieval times or something. So I just wouldn't want to. Invest in South Africa myself. So we have another London-listed gold stock, which looks amazing technically, but which has political risks which are unacceptable for me.
I do videos like this one just for fun as a hobby. It's for entertainment purposes only. Always consult a qualified financial advisor before making any investment decision.